Welcome to the Real P&L Trading Show, where I share my real P&L on 3 accounts and share my proprietary Safe Wheel options trade for free. Uh, Please type in the chat that you can hear me okay. I want to make sure that my audio is working and everything is going as planned. Also, be sure to post any questions you might have about trading options, or usually about the Safe Wheel or one of the trade systems that I trade. So let's get into first the earnings edge. I always like to go over the earnings edge first. What did I do last week with that? The earnings edge did not trade anything because, okay, Jeff, Jerry says you can hear me. Thank you, Steve. Thank you guys. Appreciate that. So I know my audio is working. Okay. Last week with the earnings edge, it did not trade anything. There wasn't anything really coming in the earnings that fit through all the filters. I'm hoping that this week there will be. I think there's quite a few things coming up next week. With the earnings edge, since my last update in October of 2022, my record is 16, 16, and 6. So 500 or 50% win rate, average win 867, average loss 480. So if you're winning half your trades, but your wins are much higher than your losses, you're gonna do pretty well. So you can see I got new 2023 numbers here. So we got 2022 did 63%, market was down 19. 2023 did 17%, market was up 24. Market was up 24% last year, or yesterday, 2023. What is SPY trading right now? I'm looking at it. It's 472.10. 472.10. So the market's down 0.5% this year, which is actually just today. All right, so we look at the overall trade. Since I started trading the earnings edge in 2022, I'm up 91.5%. The market is actually up 0.07. So basically the market's broke even since January 2022. All right, that's the earnings edge. So really not a lot going on there. Hopefully next week I'll have something more to report as far as a trade. Next, the Premier Level 5. So we can take a look at the Premier Level 5. Let's see here. We get back into the account. So here's Premier Level 5. You can see 35,000, call it 103. So you can see my real P&L, my actual net liquidation, 35,103. And you can see what it did last week. So you can see I'm down, $15 since last week. So nothing going on really. Obviously, it's the first day of the year, right? Everything got reset. All the accounts got reset. But I started trading this April 8th of 2022. You can see I did about 12%. The market was down 6% from that point in 2022. And then 2023 did 4.5, and the market was up 24. So you can see that the PL5 is 17% up, and the S&P is 16.35 since then. So about break even there. But since trading live, my drawdowns have been only 1/4. So on a risk-adjusted basis, vastly outperforming there with the PL5. This is my flagship program that took me years and years and years to develop and finally come up with. Okay, so that's the Premier Level 5. Let's get into the Safe Wheel now. Let's talk about the Safe Wheel. Okay, I'm trading DKNG. Let's go into the monitor tab here. What's going on? Well, let me talk about the P&L first. You can see it's 63.50. 63.50, so it's down a little bit from last week. So 2022 results for the Safe Wheel, up 21 versus down 19 on the S&P. And then 2023, up only 5.3, where the S&P was up 24. So underperformed in 2023. But the thing is, you can underperform for a period. It's just when the S&P has a large drawdown, I'm not going to see those large drawdowns. And you can see the results up 28% where the S&P is at break even. So yeah, underperformed significantly in 2023, but still outperforming by a massive amount. And then the drawdowns are about one half the S&P 500. This year so far, this is just today, so they're about at break even today. All right, so there's the numbers. And for the safe wheel, so what are we going to do with the safe wheel? I come in here and I look, and the first thing I want to look at is my hedge, my put hedge. I want to make sure that it's not under 100 days, and it's not. And I want to make sure that the strike price is close enough to the actual underlying price. So it's got to be within 70%, or we're going to have to move it. So if I take 34.35 and I multiply it times 0.7%, that's 24, which means that this strike price needs to be at least 24, and it's 28. So it's well within the range. So my put hedge doesn't need any adjustment. And now I also have, last week, Friday, I purchased like a $5 long call to protect this hedge. So that's doing fine. It's got 3 days to go. So the today being Tuesday, we're probably going to be a little short on premium compared to if it was Monday when I typically trade this. But we'll take a look at that in a minute. So I have 100 shares. I see that I come in, I'm long 100 shares at the 37.50. So my goal is to sell a call at 37.50 or higher for at least $35. So let's go take a look at that. Now I want to do all my trading here with the 3 days left. So remember, today's Tuesday, so there's not as much premium as normal. So on the call side, 37.50, I cannot sell at the money or out of the money for anything above, that $35 mark that I want to sell for. So what that means is I'm going to open up a second tranche. I will only do 2 tranches. I'll never do 3 because I only have 3 put hedges. I need to be hedged. So I'm going to put on a second tranche. Actually, I did this last week and the week before. I sold a put and they expired out of the money. So I just collected that premium. So what I'm going to do is open up a second tranche. I'm going to sell a put. I want to get at least 35 cents and I want to be out of the money. So the 34 put looks like the one I'm going to go with. I can't go with 33.50. It's not enough premium. So I'm going to sell this 34 put and I'm going to do one of these. Looks like bid price is 47. I want to get as much as I can. I'll try to get 48 for it. Now I want to do one as far as the sizing. Okay, that filled right away. So I want to get, as far as the sizing, if I have between $5,000 and $10,000, I'll do 3 put hedges and I'll do 1 traditional wheel, 1 contract. If I had 10 to 15,000, I would do 6 and 2. If I had 15 to 20, I would do 9 and 3. So you can see that the system's automatically sized. Now I sold this, I collected $48 here, and I'm just going to sit and wait and see what next week, what's going to happen next Monday when I come in. Am I going to be below 34 and own 200 shares? Or am I going to be above 34 and be able to just not be obligated to do anything and then probably and hopefully sell a covered call? Or am I going to be in the same situation I was this week where I'm long 100 shares, but I can't sell a covered call and I can sell another put? So we'll see what happens next week. And you look at the P&L down $47. So that's today, obviously, because today's the first day of the year. The P&L got reset today, which for some people is pretty cool. For me, it's whatever, I guess. This year wasn't as good as my last 4 years. It's probably the worst year I've had, but I still made money. So, it's not that bad as long as I'm making money. and definitely outperforming the S&P 500 over the last few years. Okay, so let's see if there's any questions about anything here. So you guys mentioned that you can hear me okay. Let's see what Kavant says. Kevinant. Thank you for your great work. I hope 2024 will be even better. Do you plan to release any new trading systems this year or update the current ones? Yeah, I have an updated trade plan for the PL5, which is better than what it was before. But that's really early information about that. I am working on I'm doing some extensive research R&D on possibly a new type of trade, but I don't think I'm going to release anything new. Probably going to keep with what I have because it's really solid and proven. So I just see possibly upgrading the PL5. And I do have the test account that I show my P&L, so there is something potentially coming for that. But as far as the safe wheel and the earnings edge, I don't really see any changes coming on to those guys. Those guys are doing what they're supposed to do, and they're pretty straightforward, so I don't see a lot of changes coming with them. There's no need for them if they're doing well. But good question. All right, so Waken Black and Video. I'm not sure how to say that, but at what point do you cut your losses and sell the 100 shares? Assuming the price never recovers. There is a point where, if there's a point where I cannot sell any premium, so I come in and I'm looking to sell premium. I own 200 shares, right? And I want to sell premium against those 200 shares, and I cannot sell any premium. At that point, you can call it cutting my losses, but at that point, sometimes that put hedge is actually paying me more. So it's covering any loss that I have on owning the 200 shares. There can be a point where you're right in between in no man's land, where you own the 200 shares and the put hedge isn't really paying you as much as you're losing. And I cannot collect any more premium. I'm not going to sit there with dead weight, like a dead soldier, and just let my account just sit there and not collect any premium. At that point, I'll come out, and I could come out as a loss. It's possible. I don't think I might have did that in 2022. I don't think that happened in 2023. I don't know. You guys might remember better. Rob, somewhere in your videos you stated that backtesting the safe wheel resulted in historical returns of around 10%. I'm assuming it is based on trading with margin. Yes, it is. Yes, because right now I could possibly be long 200 shares, and that would could possibly take up more than $5,000. It could take up somewhere between $5,000 and $10,000, depending on what the price of the shares were. If the price of the shares are $50, which I don't trade $50 stocks, you're looking at $10,000 right there. So if they're if the price of the shares are $40, you're looking at $8,000 just in the 200 shares being tied up. So yes, I am talking about $5,000 with margin, $10,000 in buying power. Curious. Hi, Carl. At an interview you mentioned a margin incident you had with IB, Interactive Brokers, resulting in a loss. Was that on the safe wheel strategy? No, it was not. I wouldn't worry about, in hindsight, how could you have avoided it? Okay. So with Interactive Brokers, it's not an issue when you're using regular margin like the safe wheel. Not at all. It's about span margin. Well, it's not really even about span margin either, because span margin uses the CME as their guideline, and everybody uses the same guideline for span margin. It's about portfolio margin, because portfolio margin, every broker has their own rules when it comes to portfolio margin. And that's why I like Thinkorswim, because they have pretty solid rules. They don't change the rules on you. Where interactive brokers, they've been known to just on a whim feel like they want to change the rules, and all of a sudden you get margin called. So um, how could I have avoided it? I could have not been trading with interactive brokers. And the problem with interactive brokers also, like, a margin call really isn't the end of the world. It's not that huge of a deal, especially if you're trading with Thinkorswim or even TradeStation, because they'll call you. That's why it's called a call. They call you or they email you and they tell you you have until the end of the day to do something about this, which is fine. Then you can just close down one of your positions or you can do what you need to do. Interactive brokers, they don't call you. They go in and they, if you are short puts, they'll sell those puts. They don't care about your trade structure or, your deltas that are neutral or anything. They just go in and wreck the account. So not only do they change their rules, or they've been known to change their rules. I can't name when they did, so I can't be 100% right. I'm just going off of what I've heard, that they've changed the rules as they feel. They also go in and trade your account without even telling you. They don't give you a chance to do anything. That's the problem with interactive brokers, and that's why I would not use them. I mean, I would use them with portfolio margin. I would use them, but I know my risk and I totally understand what's going to happen. Like, I've got my risk parameters in line, so I don't get close to getting margin called. Now, back in the day when I was experimenting and I was doing, if didn't have my margin in order, I got margin called by IB one time and they took out my account and I was directional and I was short because there was risk to the downside of my portfolio. So they turned it around and made the risk to the upside. And I had to go in there and pretty much, if I remember correctly, I had to get out of all my positions and start over because it was just a wreck. Like, it was no way of fixing it. You just had to get out of everything. So yes, that has happened to me before, but with my experience that I have now and understanding where my margins are and all that kind of stuff, I'm not worried about it. Even if I was using interactive brokers, I'd be fine. It just depends on how much experience you have and your understanding and the level of knowledge of margin, and making sure that you never get close to a margin call. Not that it couldn't happen. I mean, it could happen, but yeah, that's my take on interactive brokers. John, why the new tranche and not the covered call? Because I want to make sure that I can get enough premium when I sell a covered call. And this is kind of the thought process of the traditional wheel. The traditional wheel, this is what happens to a lot of people. They'll get into DKNG, for example. They'll get assigned at $37.50, like I did. And now you don't want to sell a call at, say, $36. Yeah, there's premium there. But if you sell that $36 and you get assigned, you just bought at $37.50 and sold at $36. You lost $150. You don't want to sell below your cost basis, or before, not cost basis, your assigned price. You don't want to sell a call below your assigned price, right? Because then you can take a loss on the stock. So I need to sell at least at $37.50 or higher. And then when I go to sell, maybe I could have got 5 cents. Well, that's not enough. I want to get at least 34, 35 cents, whatever the stock is trading at. So I want to make sure I get enough premium. If I don't, I can just go in with a second tranche and collect premium on the put side. And now this is kind of where the system can make some money, because what if DKNG kind of shoots up? Let's say it goes up to 39. I'm holding those 100 shares and I'm not capped. So there's a good, that's a good thing to be. It's a good thing to not be capped, or to sell further out of the money. Like, so let's say I sold a $39 call, that would be good to get assigned. And that's typically how the system makes money. It makes money when you get assigned and then you kind of sell a call far out of the money and and then get the shares taken away, or you own 100 shares like we do right now, and then the DKNG just shoots up to like 38 or 39 or something like that. That's another way. So really, that's kind of what I'm banking on for the big wins to make the system work. John, don't you address the amount you received in the first part? Okay, so yeah, I mean, there's been premium that I've already collected, but I don't really use that as a filter to tell me what to do next. So I don't really pay a lot of attention to it because it's not going to tell me what to do next, even though, yes, that's a significant factor. But typically, what I'm trying to do is collect enough premium to cover my hedge and then a little more, and then get assigned and get called away, and then make money getting assigned and getting called away, making the money there, and then in the meantime, kind of making a little bit of money by selling premium, if that makes sense, right? Okay, John says thank you. Okay, thanks. You're welcome. Okay, so I don't see any more. You guys have any other questions or comments? Let me know before I start winding down the session here. All right. Well, I don't see anything else. So one thing I always like to say before I leave the session is, if the P&L is not real, what else are they trying to conceal? I'll be back next week.